Welcome back to the channel, the Wolf of London. Now, I hope you guys are great. I didn't even realize this, that today's quadruple witching day, and I'm so glad I saw that before today was over. Anyone that doesn't know, I already did a video about this not too long ago, maybe it was 3 months ago it happened, so of course the video is probably about 3 or less months old. But I thought I'd do another video updating you guys on what it is and explaining what quadruple witching is.
Nobody. I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is gonna go up, down, sideways, or in fucking circles. How many times a week?
Like three, four times maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket. Keep it up with me. Money comes in, the parade comes to town. Going down Broadway is a one-way street, whichever way I go.
So, what is quadruple witching? Well, quad, means 4, so you can already know that 4 things are happening. Quadruple witching refers to a date on which stock index futures, stock index options, stock options, and single stock futures expire simultaneously, all at the same time. While stock option contracts and index options expire on the 3rd Friday of every month, all 4 asset classes expire simultaneously on the 3rd Friday of March, June, September, and December. Quadruple witching is similar to the triple witching dates when 3 out of the 4 markets expire at the same time, or double witching when 2 markets out of the 4 expire at the same time. Now, there's some key takeaway points which we're gonna go through. Quadruple witching refers to a date on which derivatives of stock index futures, stock index options, stock options, and single futures expire simultaneously. While it may result in increased volume or arbitrage opportunities, quadruple witching does not necessarily translate to increased volatility in the markets. Quadruple witching days witness heavy trading volume in part due to the offsetting of existing futures and options contracts that are profitable. So, it's saying that increased volatility could happen, but it's not a causation or correlation. But increased volume, yeah, that will happen. And it's explained the 4 things expiring at the same time. Heavier volume, let's see. Quadruple witching explained. Quadruple witching replaced triple witching days when single stock futures started trading in November 2002. Despite the expiration of 4 contract types, the terms triple and quadruple witching are often used interchangeably. Quadruple, triple, and double witching all derives their names from the volatility or havoc inherent in all these derivative products expiring on the same day. In folklore, the witching hour, midnight, when supernatural beings are said to roam the earth, brought havoc and bad luck to those unfortunate enough to encounter them. So, that last hour, or we like to just call it power hour every day. Come on, power hour. Anyway, but no, this last hour will be very important. So, 8 o'clock in the UK to 9 o'clock, or back over in the States, wherever your time zone is, that last hour, it's going to be very important. Types of contracts involved, you can see it's got option contracts, index options, single stock futures, and index futures. Options are derivatives, which means they are based their value on underlying securities such as stocks. Option contracts give a buyer the opportunity, that's what you got to think, options, opportunity, but not the responsibility. So opportunity, you can, but you don't necessarily have to. And responsibility, you're not obliged to take that. To complete a transaction of the underlying security on or before a specific date for a preset price called a strike price. So a strike price is a price you agree on the contract saying, at this day I will buy this amount of stock at this price, and you agree to it. Now, whether it gets exercised or not, that's a different story, but you're agreeing to pay a certain amount. Options can be purchased to speculate on a price increase in a stock called a call option. If the price is higher than the strike price at the option's expiration date, the investor can exercise or convert to shares of the stock and cash out for a profit. A put option allows an investor to profit from a decrease in the stock's price. As long as the price is below the strike on expiration, options expire on the third Friday of every month, and there is an upfront fee or premium to buy or sell an option. Index options. An index option is just like a stock option contract, but instead of buying individual securities, index options give investors the right, not the obligation, to transact the index, such as the S&P 500, whether the index price or value is above or below the option strike price on the expiration date determines the profit of the trade. Index options don't offer any ownership of a single individual stock. Instead, the transaction is cash settled given the difference between the option strike and the index value at expiry. So that seems like a safer option than the previous one. Single stock futures. Futures contracts are legal agreements to buy or sell an asset at a determined price at a specified future date. Future contracts are standardized with fixed quantities and expiration dates. Futures trades on a future exchange. The buyer of a futures contract is obligated to buy the underlying asset at expiry, while the seller is obligated to sell at expiry. Single stock futures are obligations to take delivery of shares of the underlying stock at the contract's expiration date. Each contract represents 100 shares of stock. However, holders of stock futures don't receive dividend payments, which are cash payments to shareholders from a company's earnings. Now the last one we got is index futures. Index futures are similar to stock futures, except investors buy or sell a financial or stock index with the contract settling on a future date. At expiry, the existing position is offset and a profit or loss cash settled into the investor's account. Investors use index futures to bet on the direction of an index, buying if they believe the index will rise and selling if they believe the market will decline. Index futures can also be used to hedge a portfolio of stock so that a portfolio manager does not have to sell the portfolio during market declines. Instead, the future contract earns a profit while the portfolio declines and takes a loss. The goal is to minimize short-term portfolio losses for long-term holdings. So it's seen as a hedge in a way. Market impact from quadruple witching. Quadruple witching days witness heavy trading volume. One of the primary reasons for the increased activity is the options and future contracts that are profitable settle automatically with offsetting trades. Call options expiring in the money that are profitable when the price of the underlying security is higher than the price in the contract. Put options are in the money when the stock or index is priced below the strike price. In both situations, the expiration of the in-the-money options results in automatic transactions between buyers and sellers of the contracts. As a result, quadruple witching dates leads to an increased amount of these transactions being completed. Following the week of the quadruple witching, the market indices such as the S&P 500 tend to decline. Perhaps due to exhausting the near-term demand for stocks, despite the overall increase in trading volume, quadruple witching days do not necessarily translate into heavy volatility. Volatility is measured of an extent of price fluctuations in securities. The low volatility could be due to long-term institutional investors such as pension fund managers who are legally unaffected since they don't change their long-term positions. Also, the availability of a variety of hedging instruments with multiple expiration dates throughout the year has diminished the impact of quadruple witching days somewhat. Now, we're just going to go down to this bit. Pros and cons. Quadruple witching may provide arbitrage the opportunity to profit on temporary price distortions. And another pro, increased trading activity and volume happens on witching days, which can lead to gains in the market. Pros. Cons. There's little evidence that quadruple witching leads to increased profitability since market gains are usually modest. Increased volatility can offer the potential of gains, but losses can be equally evident. So, the cons and pros pretty much cancel each other, they negate each other. Or there's more market orders going through, so increased volume. That's it. Increased volume is the only thing you can guarantee Whether you make money, lose money, or whatever, that you can't guarantee, but you know there's more volume. That is it. And that's what people try and profit off price action from volume. Now, many people use this website. This is the first time going on the website. Normally, I see screenshots on Reddit of this website. Stonko Tracker. Basically, it's just to track everything GameStop related regarding price and options. So as you can see right now, it's 4:20. Oh my god! I could have picked a perfect time. I swear to you guys, it generally is 4:20. Hold on. There you go. Look, 4:20. Anyway, so nah, I want you guys to like the video for that timing. I generally didn't even see that. Like my mic is covering the screen. But anyway, so at the time it's $216 a share, and for SSR, which is basically short sell restriction, which means you can't short it on the down ticks, but you can short it on uptick. It doesn't matter. Short sell restriction, the trigger price is 201.23. Now they're not going to be hitting those numbers because we know as soon as the SSR's triggered, the only way for the price is really up. Now you can see there's FRA, which I think is like a French exchange. You got to go for 182.25 euros. It's just slightly more than what it is in dollars. Calls expiring in the money as of June 18th. And remember, today's Friday, but not any Friday, quadruple witching day. 6,988 calls in the money. So remember, add extra zeros, that's 698,800 shares that will be purchased if it stays in the money. Now, you got an extra 10,784 calls that could be in the money if it closes above that price. So that's what's already expiring in the money. That's the extra that could expire in the money if it hits that price. Now the shares available to borrow is 2,000 shares, which is 0.6%. And ETS available is 22,848. This is via loads of different ETFs, like a lot of different ETFs. Hold on. I'm pretty sure it will show you. Wait, where was it? Let's just click more info, open new tab. So it shows you like all the ETFs where game is available. Last thing is you can see when shares have been borrowed. You can see like there was 8,000 in total, and now it's only 2,000, so 6,000 has been borrowed. And the ETF number surprisingly has gone up. So a bit weird. The available shares has gone down, but the ETS itself have gone up. Anyway, your options data. We're just gonna look at the top one, which is basically for today. You can see 6,988 calls in the money and 83,114 out of the money. There's so much calls out of the money. And then puts in the money is 11,788 and then out of the money is 66,119. It says the short percentage for yesterday was 58.1% and the dark pool percentage is 50.6%. Now whether those are accurate, I don't know. And then it talks about filter delivers. We don't get filter delivers up to date, which is a bit shit. The last filter deliver we have is the 28th of May. Closing price $254.13. How much failed to deliver? 52,275. Now that could be a lot more higher, but we will never know. We will never know at this current time. Anyway, what is GME's price saying? Like I said, here's the chart. You can see it's gone down a lot from open, but who cares? What apes? You just buy and buy and buy and buy. Remember, when in doubt, zoom out. When in doubt, zoom out. Guys, GME is still long. The game is strong. and I don't know where else to put my money in because that would be wrong. Anyway, I hope you enjoyed this video. Hopefully it was a little bit informative. If you already knew what it was, well done to you, that's good. If you didn't know, now you know, also well done. But yeah, if you enjoyed the video, leave a like. If you didn't, leave a dislike. Honestly, just tell me why you didn't like it, what I can do differently, what you want to see instead. Just put that in the comments down below. Also, if you're new to the channel, please do subscribe. It does help the channel out in a way to get these videos out to more people. And always, if you don't like it, you can always unsubscribe afterwards. It is free to subscribe and unsubscribe, so no pressure there. Anyway, have a nice day.